Hey everyone, welcome back to Corporate Decoder, where we break down the big financial news, and today it seems like People's Bancorp Inc. is getting a little too cozy with earnings calls and leaving us to sort through the numbers, so let's dive in. First off, we're looking at Pekin Corp's Form 8K, which is essentially a current report filed with the Securities and Exchange Commission. Think of it as a company's way of quickly telling the public about major events that shareholders should know about. This particular report is dated July 28, 2025, and it's all about their financial results for the quarter ending June 30, 2025. The really interesting part kicks off with the actual financial details. The company had a conference call on July 22, 2025 to discuss how they did in the second quarter of 2025. They're letting us know that a replay of that call is available on their website, which is good for transparency. But what we really care about are the numbers, and they are always a bit more complex than just good or bad. Now, here's where things get interesting. Companies often use what they call non-generally accepted accounting principles or non-GAAP financial measures. Basically, they adjust the standard numbers to give you a clear picture of their core business operations, or sometimes to make things look better. Here, they're adjusting for things like amortization of other intangible assets. For the quarter ending June 30, 2025, their adjusted total non-interest expense was $68,051,000. This is down slightly from the previous quarter, but up from the same time last year. When you're looking at expenses, you want to see them managed well, and this figure is a key indicator of how efficiently they are running the business. On the income side, total non-interest income for the quarter was $26,880,000. They've also adjusted this figure by removing certain items like net losses on investment securities and asset disposals. The adjusted figure, or total non-interest income excluding net gains and losses, came in at $27,150,000. This adjusted number gives us a better sense of the ongoing revenue streams from their normal business activities. This leads us to the efficiency ratio, which is a big one in banking. It basically tells you how much it costs the bank to generate a dollar of revenue. A lower ratio is generally better. For the quarter ending June 30, 2025, their efficiency ratio was closely 9.25%. This means it cost them about 59 cents to make a dollar, compared to the previous quarter where it was 60.68%. They've become more efficient, however, it's slightly higher than the same quarter last year when it was 59.25%. This means it cost them about 59 cents to make a dollar. Compared to the previous quarter where it was 60.68%, they've become more efficient. However, it's slightly higher than the same quarter last year when it was 59.25%. This means it cost them about 59 cents to make a dollar. Compared to the previous quarter where it was 60.68%, they've become more efficient. However, it's slightly higher than the same quarter last year when it was 59.19%. Now let's talk about the company's health from a balance sheet perspective, specifically something called tangible equity. This is a measure of their net worth, but adjusted to remove intangible assets and goodwill, which are things like brand value or customer lists that can be hard to put a precise dollar value on. For the quarter ending June 30, 2025, People's Bancorp had tangible equity of $755,000. This is a healthy increase from $79,165,000. This is a healthy increase from $729,150 to remove intangible assets and goodwill, which are things like receipt of $755,000. This is a healthy increase from $7,568,000. At the end of 2024, what this shows is that their core equity is growing after accounting for those more abstract assets. And when we look at tangible book value per common share, it's sitting at $21.18 for the quarter ending June 30, 2025. This is up from $19.94 at the end of 2024. A rising tangible book value per share is a positive sign, indicating that the company's intrinsic value is growing. It's like saying the actual assets backing each share are increasing in value. Their tangible equity to tangible assets ratio, which shows how much of their tangible assets are supported by tangible equity, was 8.26%. This number is pretty stable, showing a consistent approach to their asset and equity structure. Moving on to profitability, let's look at pre-provision net revenue, or PPPR. This is a very important metric for banks because it shows how much profit they are making from their core operations before accounting for potential loan losses, which are set aside in something called the provision for credit losses. For the quarter ending June 30, 2020-2025, their PPPR was $44,375,000. This is up from $41,930,000 in the previous quarter, which is a good sign of improving core profitability. However, it's slightly down from $42,000 in the same quarter last year. This means their operational profitability. However, it's slightly down from $42,000 in the same quarter last year. This means their operational profitability is ticking up quarter over quarter, but they are facing tougher comparisons against last year's performance. Digging deeper, income before income taxes was $27,453,000 for the quarter. When you add back the provision for credit losses, which was a substantial $16,460,40,61,40,2,000 for the quarter, you get that pre-provision net revenue number we just discussed. The fact that the provision for credit losses is a significant chunk of their income tells us they are setting aside a good amount of money to cover potential bad loans, which is prudent, especially in uncertain economic times. Let's look at how they're presenting earnings on an annualized basis, adjusted for those non-core items again. The annualized net income adjusted for non-core items for the quarter ending June 30, 2025 was $85,000. This adjusted figure aims to show a more normalized profit. This adjusted income is then used to calculate the return on average assets adjusted for non-core items, which came in at 0.93%. This metric tells you how effectively the company uses its assets to generate profit, again looking past the one-off items. It's a slight dip from 1.09% in the previous quarter and also down from 130% a year ago. So while their core operations seem to be improving sequentially, their overall asset efficiency in generating profits has weakened compared to last year. The return on average stockholders' equity ratio, which measures how much profit a company generates for every dollar of shareholder equity, was 7.42% for the quarter. This is a decline from 8.79% in the prior quarter and significantly lower than the 10.99% seen in the same quarter last year. This indicates that they are earning less for their shareholders compared to previous periods. Now, looking at the return on average tangible equity, which is a similar metric but excludes those intangible assets, the picture is a bit different. The annualized net income excluding amortization of other intangible assets for the quarter was $92,088,000. This divided by their average tangible equity of 12.31%. This is down from 14.66% last quarter and 19.21% the year before. However, the exclusion of debt-related charges tends to make this higher than the standard return on equity. So what does this all mean for People's Bancorp? On one hand, the sequential improvements in efficiency ratio and pre-provision net revenue suggest that their core banking operations are becoming more effective quarter over quarter. They're also growing their tangible equity, which is a solid foundation. However, the decline in returns on average assets and equity compared to the previous year is something to keep an eye on. It hints that despite core operational gains, overall profitability and asset utilization have weakened relative to last year. The increasing provision for credit losses also tells us they're being cautious, which is good in principle, but it does eat into current profits. The company's strategy seems to be focused on improving internal efficiency, but they are facing headwinds that are impacting their overall returns. The market is always looking for growth and improved profitability year over year, and that's where People's Bancorp seems to be struggling a bit. A key risk here is if these headwinds persist, it could put further pressure on their earnings and investor sentiment. The opportunity lies in their ability to continue managing costs effectively and navigate the economic environment to turn those sequential improvements into year-over-year growth. Ultimately, People's Bancorp is a bank that's making some good operational moves internally, but they're facing a challenging environment. Investors will be watching closely to see if they can translate these internal gains into stronger overall financial performance and reverse the downward trend in key return metrics compared to last year. Alright, that's our breakdown of People's Bancorp's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.